Welcome to Dhann Ki Baat. So this week of Dhann Ki Baat, we'll be discussing about Nifty, Bank Nifty, few sectoral indices, some stocks. So let's start with the Nifty. So we can see that finally Nifty has fallen below 200 days moving average. Now the trend has become bearish for the near to for the medium term. So on the higher end, there may be some pullback because after a correction of 1,200 points, Nifty may see some pullback towards the this level. Like this is 200 days moving average, which is peaked around 16,900. So as long as it is trading below 200 days moving average, there may be some pullback. But the rise, but any kind of rally will be sold off. But if Nifty moves beyond 17,000, which is 200 days moving average level, then there may be some serious buying in the market. But till then, the trend is negative for the midterm. On the lower end, there may be some support. Immediate support is at 16,400, below which there is a support at around 16,200, which is a recent low. But below 16,200, we can expect Nifty correcting towards 15,400. So on the higher end, resistance is at 16,900, 17,000. On the lower end, crucial support is at 16,200. So this was Nifty. Bank Nifty also fell below 200 days moving average, and so far it has traded below 200 DMAs, 200 DMA after the uh, fall below the 200 DMA. So now on the higher end, 36,650 is going to act as a very crucial resistance for the short to medium term. Any pullback can be uh, can be seen in the market and in the banking space, but on the closing basis, 36,650 is going to act as a resistance. Whereas on the lower end, there may be some support at 35,800 below, which 35,000 is going to act as a very crucial support. Below 35,000, the banking index may dip down to 33,000 over the medium term. So the trend for the medium term is bearish. Even maybe there may be some short-term pullback, but overall trend is bearish. This is Nifty Mid Cap 100. So in this chart, we can see that Mid Cap 100 witnessed uh, if a correction over the recent past, and the correction was big enough, and now it is seeing some pullback. But the pullback has got restricted to 28,000. Now as long as it is trading below 28,000, there may be some correction coming back in the space. But once it moves beyond 28,000, it can move up towards 29,000, 29,500 kind of levels, because it it had failed below 200 days moving average much before Nifty did. So the correction was there. It had corrected a lot. Now some pullback may be there, but for that it need to move beyond 28,000. On the lower end, support is there at 27,350 kind of levels, below which it can move down once again. So this is the small cap 100 index, and small cap also had fallen below uh, 200 days moving average much before Nifty did. So correction was there. There was a very strong correction. If we see that from 12,000 to 9,300. So there was a big correction. Now the index may witness some pullback, and on the higher end, there is a resistance at around 10,000. Then above 10,000, it can move up towards 10,500. Whereas on the lower end, the Nifty Mid Cap 100 has a support of 9,550, below which the corrective phase may resume. The next one is Nifty Auto Index. So Nifty Auto Index fell below 200 days moving average. Then it has moved up higher and closed above 200 days moving average on the last day of the week. Now on the higher end, it found resistance at the falling trend line, and the resistance is there at around 11,000. As long as it is trading below 11,000, there may be some consolidation in the auto space, and maybe some correction can be seen there, as long as it is trading below 11,000. On the lower end, support is seen at 10,800 kind of level, 10,800 to 10,750, below which once again the correction will be there in the auto index. Now moving on to the next chart, this is Nifty Pharma Index, which has a very interesting chart. Nifty Pharma has a positive divergence in the RSI, daily RSI. Now this means positive momentum going forward, and the price and the index value is going to improve in the coming days. So this is what the chart indicates. And on the higher end, 13,500, is a level where the index value can move up to in the over the short term. Whereas on the lower end, there is a support at 12,600. So this were the index ideas, index view. Now moving on to the first talk. Our first talk is Gujarat Narmada Valley. So we can see that this is a daily chart, and on the daily chart we can see that the stock has formed a cup and handle pattern, and it has moved beyond its rim. So the pattern is intact and pattern is in force. And after a few days consolidation, few days of downwards consolidation, the stock is in up move once again. And on the higher end, the stock can move up towards 600 to 620 over the short to medium term. And on the lower end, there is a support at 520, below which the stock may fall back into the consolidation, and the stock is trading comfortably above the 50 EMA. So and the we can see that the stock breakout was backed by decent volume. So overall, the stock is going to remain bullish for the short to medium term. The next stock is Amara Raja Battery. So the stock has formed a bullish harami pattern on the daily chart. It's a two candle Japanese candlestick pattern, and the formation is very bullish for a reversal point formed after a prolonged correction. Now we can see that the formation is after prolonged correction, and we're expecting that the stock is going to move higher towards its 50 EMA, which is peaked just above 600. So we are expecting a movement of 600 kind of levels. So on the lower end, 534 is going to act as a very crucial support, below which the stock may fall into consolidation once again. But till then, pullback may continue. So that's it for the week. We'll be meeting you in the next week. And till then, stay healthy, stay happy. Thank you for watching.